All right, so today is Tuesday, September 22nd. This is the end of the day review. As you know by now, if you've been following along with our daily updates, we're trading the adaptive entry system. It provides a very simple to recognize set of signals, whether we may be, whether the market conditions are set up to go short or to go long. We just follow the signals. We follow the signals. The practice we apply is we just follow the signals no matter what is happening because we trust the signals. We're going to have really strong performing days. We're going to have some weak days. Today happened to be a weekday overall in terms of performance. But what I'm excited about today is to emphasize how even having a losing day doesn't really interfere with your ability over a 12-month period, 52 weeks, as a trader to develop an income for yourself and to forecast reasonably what that income is going to look like. So here's our performance for today. This is September 22nd. I'm going to scroll up here to the 7 a.m. time frame when we start. You can see all the profit and loss categories. You can see what strategy we've been applying, and you can see what time of day each of those trades were placed. So I'm going to scroll down here, capture the last part of the day. Now, before we get too far into this, I want to have a teaching point here. Here towards the end of the day, you're going to see two trades. One was a trend bias trade and one was a consensus trade. Both of these are recorded as zero profit. See, we have a philosophy here that later in the day, like in the last hour, maybe hour and a half of the market day, we don't want to expose ourselves to a huge amount of risk. We were having a little bit of a challenging day in terms of profit performance today. And again, you're going to see how that layers into our 12-month plan, and it's really not that big of a deal. But we get later in the day, and I want to limit my exposure. So what happened on both of these trades was we opened the trade following the signal. We saw a small degree of profit almost immediately. And what we did was we entered a manual stop in order to lock in a no risk trade. So all of a sudden we converted that trade from potentially losing 20 points to I can't possibly lose on the trade. Now, once I put that in, if the price had continued to move, both of these were long trades, so if the price had continued to move higher and it hit our 5-point profit target or a 10-point profit target, great, we would have had a profit. But it's a way to say, I'm willing to take the signal, but I'm going to limit my downside exposure on these specific trades because it's late in the day. And in this case, we would have locked in 5 or 10 points of profit, but we would have had no risk at all on the trade once we locked in the break-even stop. I think that's a critical part of being aligned with the art of trading. It's not just a science of trading. It's not just a specific rule. It's just looking at your own situation for the day and say, I'm willing to take the signal, but do I really want to expose myself to $400 of potential loss on a single contract this late in the day? My answer to that is no. So the minute I have an opportunity, I lock in a no risk trade. And we ended up getting stopped out for no profit, no loss on both of those trades, including commission, because the way we lock in the no risk, we're actually accounting for the commission and fees on that trade. So it literally is a no profit, no loss. Okay. Let's just see here. We're going to take a look at our daily summary. All right, so we've got our 9:30 to 12 category. Gosh, we ended up losing 44.25 points today. We did 15 trades. Okay, that doesn't feel very good. We ended up losing 71.5 points on 19 trades today, just taking the trend bias and continuation signals from 7 to 4. We had several 20-point stop outs. We had some fairly sizable moves that took us out at 20 points. This, I believe, happens to be our biggest losing day so far, and it increments by 1 the number of losing days that we have had in that category, that 7 to 4 trend bias and continuation. So now we've had 8 losing days out of 71 trading days. Think about that. It doesn't feel very good in the moment when it's happening, but when you look back, global perspective, 8 losing days out of 71 trading days is a really strong win-loss ratio overall by day. So I feel pretty good about that. Now, let me take that information and translate it to our trading plan and tell you why the trading plan helps me emotionally overcome those losses, emotionally overcome the fact that we have, you know, this negative feature of the day, negative part of our day. So I'm going to go over here, and we are on the 9:30 to 12 category. I need to refer back to my summary. Minus 44.25 points, 15 trades. Okay. So 44.25 times $20 a point. We're trading the NASDAQ 100 futures. It's $20 a point per contract, and we're trading 3 contracts. So today was a loss of $2,655. Yeah, so we kind of negated what happened yesterday. Yesterday was really strong, really positive. And I can start telling myself all sorts of stories about, oh, I gave it all back, and geez, you know, this isn't working, and look at the losses I had, and that doesn't feel very good. But I want to translate that into my trading plan before I decide to be all gloomy and doomy about this. And like I said, we had 15 trades, $3 or 3 contracts per trade. So we had 45 contracts. All right, so now we go over to our header up here, and we see that we've completed 11.4 weeks of a 52-week plan. We have had 18 losing days in 11.4 weeks, 18 losing days in 11.4 weeks. The plan initially, before you ever enter a live trade, actual results, the plan accounts for 1 losing day on an average of every 5 trading days. So we're slightly ahead of plan in terms of the frequency of losing trades. Okay, so that sounds like a negative, and it is in terms of our original intended performance. But here's the reality, folks. Trading doesn't align to what you want. Trading aligns to what it wants. We now just need to align our expectations to what we're actually able to accomplish. So these 2 numbers right here represent the average profit per day on our winning days, 23.85, and the average loss per day on our losing days, 28.37, and both of them take into account in the calculation what the frequency rate of losing days is compared to our plan. So we really should be somewhere around 11 losses right now, 11 to 12, because we're partway through week 11. But we're at 18, so we have a higher frequency of losses. Okay. Now this is where you determine whether or not you should get the tissue out and sob about how you feel about today. This is where that happens. Okay. We're averaging 23.85 points per day positive. So we're going to put that in here because where I'm entering this number is now planning going forward. We have 11.5 weeks behind us. We've got 40.5 weeks to go. We've got 40.5 weeks to go. So we want to see what our income will look like if for the remaining balance of the 52-week plan, we continue to operate at the same rate that we've been operating at, which means slightly ahead of loss frequency, 23.85 points per day on our winning days, and 28 minus 28.37 points per day on our losing days. Okay, now that is realistic going forward because that's what we've actually accomplished. You might have had an expectation that you wanted to average 30 points a day. but you're not. The net result of these two numbers, the losses and the wins, is averaging 13.64 points a day. That's the net between your winning days and your losing days. Well, you may have had a design to average 30 points a day, and you're disappointed. You look at this and go, well, that doesn't feel very good, and maybe I shouldn't be trading, and this isn't right for me, and these signals don't work. All sorts of stories that you will tell yourself that have no basis in truth. The only truth there is what is your run rate? If you forecast forward your run rate, what is your income for a 12-month period? And right now, the projected income with a maximum risk tolerance of 3 contracts is a $202,793 income over a 12-month period, having started with $5,000 in the account. So we start with $5,000 in the account. We allow this tool, this personal trading plan tool that we created for you, to help us understand what our income could be over a 12-month period if we follow the actual run rate that we have been able to establish so far. Now, if your average between the net of positive and negative days is 13.64, but you had a design of wanting 30 points a day average, well then perhaps there are some additional learnings for you, some additional adjustments you can make, some additional opportunities for you to continue to learn how to trade more effectively. We will be happy to help you with that every day in our live trading room. Now, that aside, you're averaging net together everything, you're averaging about $582 a day. That's a really strong profit, in my opinion, having started with $5,000. You're averaging over $580 a day, okay? So the other thing you can do is, if you find that $202,000 of income, projected income, is not sufficient for where you would like to be, this number right here, the maximum number of contracts you trade, can be adjusted. Now that is the second level of limiting your exposure to risk. The first level is whatever your balance is in the account, we allocate no more than 10% of that balance, 10% of that balance, to the margin that is required to trade contracts. $500 of margin is required for each one contract. So if I'm going to trade 3 contracts, I need $1,500 of margin at Infinity Futures, the broker that we trade futures with. In order for me to commit to risk of $1,500, margin risk of $1,500, I would need to have $15,000 in the account so that I don't exceed 10% of the balance of the account in margin. But since the first limiter on margin risk is based on a 10% of the balance of the account, the second limiter is I can max out the number of contracts at whatever I'm comfortable with. If you had maxed it out at 3 and the net of your wins and losses and maximum at 3 contracts is giving you $202,000, well, what if, knowing that it will never exceed 10% of the balance of your account, what if you adjusted that to 5 contracts? That is at your individual discretion as a trading business owner. So 5 contracts gets you to $312,000 income. You know, what if you decided you wanted to put in 8 contracts? Well, there's a $477,000 income. So my point here is you can have a conservative plan, and as you develop your own, establish your own run rate of trading performance, even though it might not be up to where you had hoped it would be, this trading plan is giving you a perspective across the entire spectrum of your trading as to what you can accomplish. And it's flexible for you to set the maximum margin risk at whatever you choose, knowing that it's first of all limited by no more than 10% of the balance of your account. And by the way, we don't talk about this too much, but you can change that to 5% if you wanted to, and limit your exposure to no more than 5% of the balance of your account. And then maybe you go to 10 contracts and you got a $500,000 potential income, right? So this tool has been designed for you to use as a financial forecast for your trading business. Okay, so the other category that we track is trading from 7 a.m. Eastern to 4 p.m., which we usually cut off somewhere around 3:30 to 4 p.m. Eastern. Now, we actually ended up with the biggest losing day that we've had so far in 71 days. But let's put that in perspective. We have winning days of 125 points at one of our bigger days. We had a 105-point winning day here. We've had, a lot of 50 and 60-point winning days, 80-point winning days. So the reason I'm sharing all this is because I've worked with traders for so long. I know how they think, and traders can be prone to being emotionally distraught when they have a big losing day if they don't put it into perspective. Now, if you're trying to take money out every day, to live on, and you're measuring every single day in the moment, well, then you're just setting yourself up for that, emotional roller coaster. I'm going to take this number, the 71 and a half points of loss, which happens to be our biggest losing day in 71 trading days, and I'm going to plug it into our personal trading plan, and let's together see, was it really that detrimental? Now, when we did this yesterday, our income forecast for 12 months was just under 365,000. Okay, so I'm going to go over here, say we've got 71 and a half points of loss times $20 a point, so that's $1,430, but we're trading 3 contracts. So we gave back $4,290 today. We had 19 trades times 3 contracts, so 57 contracts. Okay, and so here we are. We have 11.4 weeks behind us. We have had 11 losing days. We're right on plan, properly planned in terms of the frequency of our losing days. The average winning day is 35.17. That hasn't changed because we didn't add another winning day to our average today. The average losing day is 27.43. We had planned, as of yesterday, 22.64. So we're going to up that. Remember, we're just under 358,000 right now. So we're going to increase that to 27.43. And now our 12-month projected income is $346,000. Yes, it declined slightly. Like any small business owner, you're in the first 11 or 12 weeks of a 52-week plan, things happen. You had an unexpected expense, a piece of equipment in your business conked out. You had a big repair bill. Something happened to your delivery fleet. You have all sorts of factors that are going to affect your business that you didn't anticipate. Hey, we didn't anticipate a 71 and a half point drawdown today. We didn't anticipate that, but it is part of reality. And so what we do is we use the personal trading plan to level set our emotions around that reality. And we still are on pace with no guarantee to potentially make a $346,000 income, having started with just $5,000. And again, you can influence the outcome of your 12-month forecast by adjusting the number of contracts. It's always limited by a certain percentage. We use 10%, but a certain percentage of the balance of your account. So 3 contracts, you could make it 2 contracts if you choose to. Make it ultra conservative. That's another thing that you can do. And that, again, is entirely up to you. If you feel that earning a $250,000 income over 12 months, starting with a balance of $5,000 and recycling that same capital over and over and over again, if you think that that is an adequate income, well, then maybe you want to max yours out at 2 contracts. I like to leave ours at 3 in our plan and profiling this for you because I think 3 is a very reasonable amount of risk, $1,500 of risk, and I think that anybody who can drive from $5,000 to $346,000 income over 12 months should be pretty delighted. Now, once again, as I said yesterday, there's no guarantee of that. I mean, what if your average profit per day drops from 35 to 25? Oops, I'm in the wrong cell. Drops from 35 to 25. Well, then that will be your reality. And your projected income drops by about $100,000 because we're fairly early in a 52-week period. You can either look at that as a woe is me or a, well, look, I'm still at a $250,000 projected income, having started with $5,000. And oh, by the way, Mark reminded me that I could adjust my number of contracts and I could be right back up to a $350,000 income by adjusting to 5 contracts. This tool is so simple, folks, and yet so powerfully flexible to be tailored to your personal trading business plan. This is why every single trader, in my opinion, needs a tool like this. We've built it for you. We're happy to make it available to you. So I'm pretty happy right now. Hard to believe I would say that, having lost 71.5 points today. But what I know in my heart is we're not going to have 71.5 point losing days every day. If you scroll back through the summary and just look at what the daily performance has been, we've got weekdays. We had a day where we made absolutely nothing. We've had other losing days, 56.25 points. We've had big winning days. You know, we've had 125 point winning days. So there's a range, and that's why I always emphasize, to me, it's not as important what today gave us, it's what the average is. And if I can continue to recreate and perform at that average level, that run rate, I refer to it as, that average run rate for the remaining balance of the 52 weeks, we got a $350,000 income or more, less if you reduce contracts, or more if you decide to increase the number of contracts. Now, what's interesting is this category is 7 to 4, trading the trend bias and continuation signals only. This category is 9:30 to noon, trading all of the signals. The optimum performing category, I'm going to show you in just a minute, is 7 to 4, all signals. So the reason I'm pointing this out is because we were down 10.5 points. If we took every signal today and we traded from 7 to 4, we're down 10.5 points. Well, I get people periodically saying to me, well, I don't trust the consensus signal, or I don't trust the momentum signal. Well, that's not based on knowledge. That's not based on history. That's not based on experience. You might have had 2 or 3 of those trades you didn't like, they didn't feel good to you, they didn't turn out for you, so you drew a conclusion with limited information. And so if I compare these two, time frames are exactly the same. The only difference is there are 4 distinct signals. This one is the trend bias and trend continuation, and this one is the trend bias, trend continuation, consensus, and momentum. The difference between those time frames is 61 points. You took 61 points of profit out of those other 2 signals. To me, that's very powerful. And we're still working on, I think most of you know this, we're still working on gathering historical data on tracking the fractals. Just off the top of my head, I think we did about 30 points on fractals today, which are not represented in these numbers. So there are other signals that are part of what we talk about in our live trading room that gave us opportunity today that are not represented here. So if we factored in fractals, and I won't talk about them 9:30 to noon because I don't remember exactly what time of day they occurred, but throughout the day, if you took 30 points and added it to this, you're only down 41.5 points. If you took 30 points and added it to this, you know, you're up 20 points. So there's plenty of opportunity, in my opinion, based on the adaptive entry system chart, based on this system. There's plenty of opportunity. As long as you're wise as a trader and you realize there's going to be losing trades, and there's going to be winning trades, and there's going to be winning days, and there's going to be losing days. There is a lot of opportunity to take advantage of here. Now I'm going to show you the averages here real quick, and then we're going to close out. Our average on the 7 to 4, taking the trend bias and trend continuation, for 71 days, we've had 8 losing days. We're averaging $641.13 a day. That to me, the average is a much more meaningful and powerful number than a single day. If I have a really, really strong profit day, which we did yesterday, that's nice to have. But again, the average is more meaningful. It's more telling. The average is something that I can replicate and use as a projected forecast. A single day, I can't. I have no trust in a single day. I have a trust in an average, especially the longer that average is. 71 trading days, there's 20 trading days in a month. So we're beyond 3.5 months here. The other category we tracked is that 12 or 9:30 to 12. We're averaging $420.07 a day. That's really a strong number. $420 a day on a single contract is $8,000, over $8,000 a month. That's a good income. If all you ever did was trade one contract, you never scaled your contracts, that's $8,000 a month or $96,000 a year. That's a really, really strong income, in my opinion. The optimum performing category, which we do not plug into a trading plan, because we've already got 2 categories that we're tracking there, is 7 to 4 all signals. That's the optimum performing category. And in 71 trading days, we're averaging just under $1,400 a day. $1,400 a day. It's got the lowest frequency of losing days. Today happened to be one of them. We had 6 losing days in 71 days, but today was only 10.5 points of loss. And it ranks the highest in terms of optimum performance amongst all of the different categories that we track, including time frames and signals, what types of signals we're taking. $1,400 a day. Now, I don't know if you want to trade 7 to 4. You might not want to do that. But we have all sorts of breakdowns that we can help you design a trading plan for yourself. You can see exactly in the live trading room. If you ask me what would it be if I traded from this start time to that start time, maybe somebody wants to trade from 8 to noon. Well, that's averaging just under $630 a day. Again, that's a really strong number, folks. That's over $12,000 a month on a single contract. So powerful stuff here. I get excited about it, talking about it, because I just love hearing from traders and how they are telling me early in the day, I met my goal today, so I'm off to play golf, or I'm off for a run, or I'm taking the dog for a walk, or I'm doing something different. When they say, I met my goal for the day, all that simply means is on their personal trading plan, they know that their goal for the day was 35 points. And if they made their goal, why do they want to interfere with their plan? That goal for the day is going to get them to their desired income for 12 months. That's how we work this. That's why we built this tool. It's for peace of mind. It's to take the emotions out of trading. And then we provided one of the most powerful trading systems for entering and exiting trades that I've ever seen in all my years of trading. So pretty excited about it. Those of you who join us in the live trading room every day, just love having you there. Love interacting with you. If you're just listening in to this for the first time, check us out at optionsmoneymaker.com/investor.